Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Time to get a couple of more value stock picks now from Tracey Ryniec, our value stock strategist here at Zacks.com. She always comes down with interesting stocks, I have to say that. This one, Greenbrier Companies, GBX, the ticker symbol, is a company that makes freight cars for railroads.
Yes, and this is a big area right now. They make them and then they repair them, so they have both things covered. They're mainly in the U.S. They have a couple facilities in the U.S. and Mexico, but they also have like joint ventures and sell and repair over in Europe too. So this area was depressed during the Great Recession, not surprising. Nobody wanted to buy any new rail cars. They were just using what they had. But they get old, they need new ones, so now they're buying again. So this company is really seeing a big jump in revenue and sales of the rail cars.
So does that mean shipping activity is up?
Yes, they're seeing extra demand from the energy sector because the shale actually uses a lot of these rail cars to ship things back and forth. So they have demand from that. And then there's some demand from truck to rail car now. So yes, demand is improving, plus everyone needs the new cars. So that's a win-win for them. They beat big in this last quarter, and they had record revenue that was up about 145%. But the interesting thing with them is that that was just fiscal fourth quarter for them. They sold about 9,400 rail cars in this last fiscal year. The year before that, they only sold 2,500. So you can already see the gains going. And then they have a huge backlog of over 15,000 rail cars going forward, which is a little over $1 billion worth of orders coming in. So basically, their sales are pretty much set for the next year, maybe 2 years, and then there's still some more orders coming in on top of that. So things look real good for them here. The analysts are really bullish about the rail car industry, at least for the next couple of years. Estimates are jumping. You know, they're going to see big earnings growth. And the chart is also interesting. They had a big rally, and then they sold off in the summer. Then they had the October rally, and now they're weakening a little bit again here. Could be a buying opportunity because they're not very expensive. They're trading around 10 times, and you know they have this big backlog, which we know is going to be filled going forward. So it's an interesting story.
So is this type of shipping an economic indicator of sorts as well? Just like the dry bulk?
Partially, yes. I mean, like I said, the rail cars do get older. They have to replace them, so that's kind of the normal replacement cycle.
Right.
But you do have some areas of the economy that are starting to pick up steam, like I said, the energy.
Yeah.
So, you know, maybe that'll give the rest of the economy a boost.
Some momentum,
yes,
yeah.
something to go off of. So, yeah, it's a good indicator.
All right, TravelCenters of America, TA, the ticker symbol, is that other value stock that you wrote about recently. Now, you would think that maybe this is a travel company. No, actually, these are gasoline stations that have restaurants associated with them,
yes.
right?
I don't know if you've ever been to one, but, you know, driving around on the highways, you kind of can't miss them.
Yeah.
They're also big with truckers and, you know, just normal travelers. But, yeah, they sell the gas. They have restaurants, convenience store, any kind of travel things you may need.
Right.
And they're in both U.S. and Canada. The interesting thing about them, they've kind of been in a turnaround. They had a real hard time during the recession. They actually lost money in 2010, but they've definitely turned that around going into 2011. You can see the estimates are starting to really jump here. They lost 31 cents. They're supposed to make 64 cents this year, and then the analysts have them at 83 cents for next year, which is just good earnings growth for a company of this size.
Yeah.
What they saw in this last quarter was that their fuel sales really spiked. But they also had a 10% gain in the retail side. So people going into the convenience store are actually buying a little bit more. That's a good sign for a company like this. You know, analysts like it for the turnaround, but nobody else seems to like it. The chart is kind of interesting. It hasn't done much in 2 years. It had this weird little spike, like kind of in the beginning of this year, and then it sold off. But it's really, really cheap. It's trading a little bit over 7 times. So, you know, nobody likes it, but that's why it's a value stock.
Yeah, right. You know, I kind of expected you to come down here with like a turkey farm or something as one of your picks for this week, keeping up with the holiday. Do you own either of these two?
I do not.
All right. Well, Tracey will have more for us in the coming weeks. In the meantime, if you are not watching this video at Zacks.com, then be aware that we put 4 new stock pick ideas up for you on our website each business day. So you'll want to get over there and get there often because they change every business day. 4 new stock picks, 1 in each of the investing categories that we write about on Zacks.com. With Tracey Ryniec, I'm Terry Ruffalo.